I've recently done an article based on the reasons why companies go into liquidation. You can find that article in the description of this video. And I think it's a very good article for this time in the economy. And I've listed and described everything in detail in that article. But here are the 6 highlighted ideas and items that I believe that's the reason for most liquidations of companies. And number 1, probably the biggest reason, outstanding taxes with SARS. Number 2, the big no-no, but misusing of customer deposits. Number 3 is interest rate hikes. Number 4 is when a specific niche market becomes obsolete or slowed down. Number 5, when 2 partners doesn't agree how to run the business, it becomes an issue and you need to liquidate. And number 6 is when a leader just refuses to grow. See you in the next video.
What is the difference between saving and investments? It might sound the same to you, but it's a massive difference. Saving is when I save up to something just to spend that money on something again. So I'm just saving up for something to spend my money on again. Investment is where I take every month a portion of my money and I invest it in something that can provide me with a potential capital growth and a passive income on a monthly basis. So, massive difference between the two, even though we might, in generally, we think it's the same item. So, I I think we need to shift our thinking to from saving to actual investment, which will provide us with retirement income and passive income for a better lifestyle in general.
Yay! Today I got written this amount at the bottom here. Got written back after a year of struggling with SARS with notice objections. I done 2 notice objections during the course of the last 2 years, and it was expenses that SARS written back, and we had to fought like pit bulls, like we always do, to get those written backs or expenses that's been written back to be sorted out and corrected. So my message, in the current economy with SARS being very aggressive with audits, you need somebody to assist you that knows what they're doing, that understand the process of a SARS audit, and will be able to take your hand and pull you through during the process of an audit, and then also potentially a notice of objection where you need to fight with SARS to get assessment corrected. Very proud of my team at Dryk Holdings. You will see on the top here, 41,000 Rand refund originally from a client for February 2023 income tax return. And after the review from SARS, they've written back 178,000 Rand worth of pay as you earn. And after a notice of objection and a stack of evidence that we had to provide to SARS, today SARS written back the original assessment, the 178,000 Rand. You will see there's a plus and a minus, and it's back to the original 41,000 Rand, which our client will receive within the next week. Super grateful. If you have any issues, feel free to contact us. It will be stated in the description below. July 2023 marks the month that we celebrate the anniversary for Dryk Holdings, 17 years of existence. Myself has been serving small business owners for just over 2 decades, and I'm sending this video and I'm doing this video out of a grateful heart, just for sharing this with employees, for sharing this with clients, even suppliers. If it wasn't for you guys, we wouldn't have been molded in the amazing accounting firm that we are today. It's merely just because of you, and I can't take the credit for this. I need to celebrate my whole team for doing this, because it was a team effort over 17 years. So thank you for that. I appreciate you all, and looking forward to serve small business owners for more than 17 years to come. Bye-bye.
Probably the best financial management practice that I could find online was from the actor and comedian Kevin Hart, where he mentions every project that he do, he take 50% of that money and he put it in a tax account, a separate tax account, something that I mentioned a number of times as well in my talks. And then 50% of that 50 of the additional 50%, so it's 25% of the total, he also put aside in an account he calls his investment account. So it's funds that he put aside, so whenever the perfect or a great opportunity comes along, he would invest it in that opportunity, and he does have the cash available to do that. And the rest, the rest of the 25%, the other 25%, he actually used for his personal expenses, for his household, and all those kind of expenses.
Two of the most frequently asked questions that we get regarding beneficial ownership submissions are, what is the deadline? And secondly, what's the consequences if I don't submit to either CIPC or the master's office? So this is my reply that I sent, the extract I got from CIPC's website. And this is reply on there. That the failure to comply may result in business restrictions, reputational damage, or non-compliance with Companies Act. In the case of trust, non-compliance may lead to fines up to 10 million and possible imprisonment. So the choice is yours. The submissions need to be done from the 1st of April 2023 and as soon as possible. So again, the choice is yours. If you feel that you need to submit, please contact us and we will assist you with the process. The new beneficial ownership rules for companies and trusts came into effect of 1st of April 2023. If you want to read more about it, you can read this article in the description. But in layman's terms, what it all means, any trust need to submit a beneficial ownership report to the master's office, which contains the details of the trustees, the founder, and the beneficiaries. And with companies, it's all about the individuals and the final beneficial owner of that shares. So it can be the individuals holding more than 5% of the shares, and any trust, we need to declare the trustees and the beneficiaries. And the whole concept and the whole idea is all about control and ownership of that specific entity. If you need any advice, if you need us to assist you, feel free to contact us, and I will leave the contact details in the description.
At my client visit this morning, we discussed their financial affairs, their financial planning for the business, and they showed me they already have the VAT pocket account, the VAT pay-as-you-earn pocket account, and they even have income tax 28% pocket account where they take their estimated profit every month, take 28% of that and put it in a tax pocket account. So now we can start having advanced conversations of their financial planning, about their tax planning, because they already do the fundamentals correctly. So, and you can see it in their finances. Like you can see how structured everything is, and because of that, you can see the reflection of an amazing business that they're building, with proper fundamentals and discipline.
I received this picture from one of my clients I've been working very closely with the last couple of months. And during the process, we explored some new ideas for him to expand his business. And it made me thought about our excuses that we make that keeps us mediocre. When we recite our excuses long enough, we will actually start believing that they are true. When we recite our excuses long enough, we will actually believe that they are true. Start having new conversations, get a fresh overlook of your business, of your thought processes that goes on in your own mind and in your own head, and get some new conversations going, get some fresh ideas for your business.
It's never been this important for small business owners to start supporting each other. And I want to take it a step further. It's never been this important to start supporting your own client base. So if you have a client that supports you, see if there's any way that you can support him, or at least refer people in his direction. A few years ago, I've made that decision that I will only support people as far as I can, potentially, as far as I can do that, to support the people that support me. one of the big examples was my short-term insurance broker that's been with me since 2001, I think. But he's not a client of mine. He's never referred anybody to me, and I've changed it to insurance broker that's actually a client of mine, and also make the effort to actually refer clients to me as well.
I've recently seen this article in the business tech where they say if you want to be part of the 1% wealthiest people in South Africa, you need to earn more than, or need to have a net asset value of more than 2 million rand in some sort of capital. So it got me thinking. In other research, they say if you want to retire safely at the age of 60 and you earn, let's say, 50,000 rand per month, you need to be able to have a capital available at 60 200 times that amount. So 200 times 50,000 rand per month, it's 10 million rand capital that you need by the age of 60. So my question is, if you're not currently there or on track, what do you need to do regarding your spending habits, and what do you need to do regarding your investment habits? Something to think about today.
This client actually sat down a month ago and we discussed his current situation in his business, and I explored a few ideas, and then the one idea I gave him was he already at this stage give a lot of referrals to other people from his business. And I told him, you can start generating referral commission from these people that you're already supporting on a weekly or on a monthly basis, but now you can also earn income from them. Go arrange with them, can discuss with them how you can do a referral arrangement agreement between each other. And he went back to them, and then after this week we actually had a discussion again, and now we're receiving referral commissions that they also already started receiving because of our conversation, and kind of just having that new mindset or idea in his head of how to generate that income. The reason most people's net asset value doesn't grow is because when the income grow, they increase their lifestyle.
Personal items through my business. If you want to start building wealth, you need to control your expenses. The biggest reason most people's net asset value does not increase is because as their income grow, they increase their lifestyle. I didn't realize how much money I spent on a monthly basis on my personal items through my business. If you want to start building wealth, you need to control your expenses.
In South Africa, you have two different tax incentives for renewable energy. The first one is for individuals, which is only for your primary residence. You can get 25% on all only solar panel installations up to a maximum cost of 15,000 rand. The second one is for business owners. Section 12B allows you 125% allowance of the initial cost to install your total renewable energy system. So let's explain this with an example. If your initial cost for your solar system is 100,000 rand, you will be able to receive an allowance from SARS of 125,000 rand. So you will be able to deduct 125,000 rand in that specific year of assessment. What would be your tax saving? It would be 27% of that 125,000 rand, which would be 33,750. I'll see you in the next video. Bye-bye.
Make sure that's within your means, and you always have that surplus available after you paid everything that you need to pay every month. I think that's the goal. You're really financially rich when you can survive for the next 3 months without receiving any income. When you have that surplus plan, you're financially rich when you have passive income that comes in every month without you need to work for that. You are definitely not financially free and rich when you have 100,000 rand a month and you need to do a lot of monthly repayments that pretty much gets to 100,000 rand.
We get a lot of clients that mention that we might be too expensive, but our service we do somersaults for our clients. Literally, we prefer to see ourselves as standing out from the crowd. I mentioned the purple cow in that very first workshop that we've done. If you are that purple cow in the industry, you can charge that premium price because there's a reason why you can charge that premium price. And you can only start building wealth for your company and for yourself when you actually start asking the premium price. And there would be clients that don't want to use you. There will be clients that say you are too expensive, but there will also be a lot of clients that will prefer you being more expensive but giving the proper service. The cost involved also, you have the transfer duties that you need to pay, the transfer cost of the attorney, you have the bond registration fees also of an attorney, and then you have the transfer duties that you need to pay with SARS. And that's on a kind of a scale, so I can send that to you as well. But that's something that sometimes court people, they have approval, they're very happy, they get the transfer fees, and then they forget about the transfer duties that they need to. And then lastly, just on that transfer duties, when you buy from a developer, so it's a new complex, a new development, generally there's no transfer duties because they obviously have a VAT-able sale that they didn't do. So they pay over the VAT to SARS, and then there's no transfer duty applicable. So that's generally for first-time buyer don't want to put a lot of cash into the mix. That's generally the best option is to buy into a new development. Either VAT or transfer duty.
For the typical taxpayer that receive IAP 5 or maybe 2 with medical aid and retirement annuity and maybe some interest, that there's no value that a tax practitioner can add to that transaction. So it's an auto assessment done by SARS, and I think in most cases it would be 100% correct. Whether you check it or not, and maybe your contact details might not be right, but at least the tax return would be correct. The value of the tax practitioner is really in the way where you actually give input and value to your client. So, I mean, make sure that if there's a tax assessment and you know the client do receive rental income or do trade in crypto, whatever the case may be, that you make sure that you're on top of it and as quickly as possible get the information from the client and then edit the return if necessary. Yeah. So that is that kind of that watching eye that you need to be as a tax practitioner.
Yeah.
So, and I don't think that there might be over time the rental income might also pull through, but there will always be value that you need to give as a tax practitioner, and I think it just become more and more important as we go along through the process of together with AI.